Hey there, everyone. It's August the 12th, Wednesday, and I wanted to provide sort of a mid-morning update on the market conditions and some other opinions. As you all know, at least today, we have the Dow skyrocketing to about 9,300 to 9,400 range, basically on hopes that the Fed will continue their crazy easy money policy of essentially not tightening anything, not raising interest rates. Things like that. You know, ladies and gentlemen, that is precisely the opposite of what has to happen. We have to raise interest rates. We have got to stop this. There has to be a correction. There has not been a correction. The Dow and stocks are completely inflated. There's no reason for them to be at these levels. The housing market is still in shambles, as you all know. We've got supply after supply after supply out there, and it's going to take dramatic price decreases for that to get sopped up by the markets. And also, let's face it, they just have to stop building. Just stop building right now and wait for the population to catch up to be able to buy the homes up. You're not going to have investors buying up stuff. I mean, even landlords are saying today that it's hard to find renters. But anyway, the economy is still, they're saying it's still recovering. I'm looking at Market Watch right now. The thing is entitled, the article is entitled "Fed Relieved but Not Ready to Start Tightening." The economy says maybe recovering. I don't see how that's possible, ladies and gentlemen. And I also want to bring up another interesting point too. The GDP last month, as you all know, came in at a negative 1%. So that means we're still shrinking. But all the good news is we went from, you can't go from a negative 6%, negative 5% in the previous months, preceding months, and have a 5% increase in 1 month. It's not possible. The numbers, I mean, it's just not possible. Ladies and gentlemen, I think the numbers are fixed. There's just no way you can go 5% in 1 month like that. Anyway, you're talking about how bank lending is still impaired. So they're thinking the recovery is expected to be tepid, especially for workers and consumers. Well, if the workers and consumers are suffering, and they are 70-something% of the economy, right there, that statement right there is contradictory. Anyway, I also have some more information too that seems kind of interesting. The Federal Reserve look like they have been buying up some debt, as you all know. The Treasuries last week, the 7-year Treasuries had a terrific response. Well, I was kind of looking back on some of these auctions in the 7-year and the 5-year Treasuries for the past few weeks. It's interesting. I think it was the time frame, and I'll have to look this up, but I'm going to say around the April time frame when we had a Treasury auction. Well, we had nobody show up to. I mean, hardly anyone showed up to that one. And then throughout April and May, it was very low turnout. And then all of a sudden, in the last month or so, we have a huge amount of people, supposedly buying up the treasuries. And you have the Fed sort of kind of coming out saying, yeah, we bought a little bit of treasuries here, a couple billion here, a couple billion there. I mean, come on. I mean, who are we kidding here? 62.5% of the buying up was from indirect buying, which is basically your central banks and things like that. I mean, who are they trying to kid? They're basically telling you guys are stupid. Ladies and gentlemen, I can tell you right now that the Federal Reserve System is buying up the treasuries. They are monetizing our debt. We are printing money to make money to pay our debt. We've got another huge offering happening this week, this Thursday. So it'll be interesting to see how that turns out. But ladies and gentlemen, this house of cards is going to fall. The tower's going to fall. The dollar's going to collapse. It's staying again below the 80 mark because of the supposed recovery. But I'm just saying, and again, I'm not a perma bear. I'm not down on the United States or down the, I don't hate the United States. As a matter of fact, I'm quite the opposite. I love this country. I don't want anything to happen to it. But the numbers are just there. And ladies and gentlemen, don't take what the mainstream media is saying to you as face value. You're being lied to. This house of cards has to come crashing down. I wouldn't be surprised to see it come down before the end of the year. And we're going to be in this video is going to be the temperament will be a lot different then. And it's just like this. If you got somebody making $100,000 a year, they have, you know, $100,000 in debts, but you know what, their payments and stuff like that, when you take you know, the interest that they're paying on their debt versus all their living expenses, all that, they're just constantly borrowing money to continue living at the $100,000 a year salary, right? Well, that's what we're doing in this country. We're just continuously buying on our credit card, and not personal debt, credit card debt, but the national credit card debt that our foreign investors hold. And they basically have sent the signal that they're cutting off their credit limits. You know, they basically have told us that. And that's why the Federal Reserve has had to step in and all of a sudden start buying to make it look like that, you know, there's still interest in treasuries and this fake debt, you know, system is going to continue, and you know, there's going to be recovery and everything's going to be rosy and pink. Well, ladies and gentlemen, I'm here to tell you, at some point in the near future, the United States will no longer be able to service its debt. In other words, the tax revenues that we all, you know, get to pay every single quarter is not even going to be able to pay the payments, just the interest payments on the debt. And ladies and gentlemen, I'm here to tell you, when that starts to happen, and that means we're going to default on our debt. It's just like your credit card payments. You know, if you have to pay $5,000 a month in credit card payments and you can no longer do that, you're defaulting on your credit cards, and we are going to be defaulting soon, and our dollar will collapse, and our economy is going to be in shambles. So I'm just telling you, prepare. You know, I could see food shortages. I could see, you know, crazy things like that. Just prepare. If anything, for an insurance policy, ladies and gentlemen, prepare. You know, prepare for the worst, hope for the best. Hopefully it won't even happen, and you can just, you know, take your stored food and water and just go ahead and eat it and drink it, you know. So let's just hope that's what happens. But right now the numbers aren't looking good. I don't know how we can sustain this any longer. Again, another thing I wanted to talk to you guys about, you know, please subscribe to my videos. I'm trying to get as many subscribers and views as I possibly can. I'm using my own money to promote my videos so I can get the word out. I'm trying to become a partner so that I can take the ad revenue and funnel it right back into promoting these videos so I can get the word out. You know, make your own videos, ladies and gentlemen. Support HR 1207, auditing the Fed. I think that's extremely important for us to do so right now. Get letters to your Congress people. Get on the ball right now. You know, the hour is late, like I keep saying. It's like 11 o'clock now, ladies and gentlemen, but we can stop this. Please, just, you know, get on the ball. Make videos. Tell your friends. Tell your friends to watch these videos. You know, there's all kinds of other videos too on the internet that are very informative and helpful. But anyway, please subscribe. Give me some comments. I'd really appreciate it. And I should have an update here fairly shortly. So again, ladies and gentlemen, have a great day, and we'll talk to you soon. Bye.